How we doing, traders? And welcome to none other than the Spacs Attack. Let's get it. How we doing, traders? Welcome to the Spacs Attack. I hope you guys are joining us from all over the world. I know that we have a lot of people joining up on Twitter and YouTube. Just to give you guys some insight, definitely the most active chat is going to be off of our YouTube. So definitely go to Benzinga on YouTube, and you guys can get into that active chat. Really excited, for another show. We've been working hard to bring you more executives. So we have some great insight today. Let's go ahead and bring on my man, the brains to the show, Chris Katje. What's going on?
Hey, Mitch. How are you?
Hey, super excited. We're seeing some movement. We have a great interview today. I think none other than let's get right into it so that we can get to this great interview. So take us back at least on the notable headlines for the day, Chris.
All right, guys. So try to get through headlines quick here today because we do have a great interview set up for you guys once again. So the big mover yesterday was DMYD. So this is DMY Technology Group 2, of course, merging with Genius Sports. So we talked about this one on the show yesterday. They got a $25 price target from Craig Hallam, analyst, due to that massive opportunity for sports betting. Company has a duopoly with Sport Radar and provides critical data for in-game betting. They have an analyst day coming on January 26th, and they expect that deal to close in the first quarter. So again, with sports betting going live in Michigan and more states hopping on board in 2021, looks like sports betting will continue to be a big story this year, and Genius Sports is the thing behind the thing that we've talked about, and we brought you the CEO, of course, of DMY Technology Group. But that was our big mover yesterday. One of our laggards yesterday, and looks like down again today, is NGA, so merging with Lion Electric. We had the CEO, of course, on last week. I want to talk a little bit about garbage trucks. So that was one of the things we brought up during that interview, was talking about their electric garbage truck and what they were seeing as far as partners and demand. So they actually had a tweet out yesterday that said, curious about our all-electric truck. Tomorrow, the Sacramento County Department of Waste and Recycling will provide info on the current status of technology, regulations, and incentives that apply to fleet operators for those garbage trucks. So I want to keep an eye on that because that's going to be today. So we could get some kind of news out of Lion Electric on that garbage truck. And then just to give you a kind of an idea on the current SPAC market, again, we talked the growing number of SPACs, and these companies going public. In January so far, there's already been 59 SPAC IPOs, raising $16.3 billion. So that's through the first 20 days of the month. The previous record was $18 billion set in October. So now there's currently 421 outstanding and filed SPACs. So just some numbers to keep in mind for everyone out there. Another mover today is we have SSPK. So the company is merging with Weed Maps. Again, a play on cannabis, another thing behind the thing. The CEO of Weed Maps is actually going to be on Mad Money with Jim Cramer tonight. Pay attention to levels. We do know that typically when a SPAC is mentioned or interviewed on Mad Money, it does see some interest in the after hours market. With the new administration, I still think cannabis is also a play here in 2021. So I'm curious to see what happens with SSPK later today. Then we did have a couple mergers approved yesterday. So up first, we had GHIV approving that merger with United Wholesale Mortgage, the largest SPAC deal ever done with a $16 billion valuation. Then we had ACAM merging with CarLots, also approved. I am long shares of ACAM. So 2 new deals to add to the week. And then our big rumor yesterday was FTOC. So shares jumped over 30% after Bloomberg reported that they were in talks with Payoneer, which is an Israeli fintech company. So Payoneer has grown during the pandemic. They've been hiring like crazy. They provide digital payment solutions. They count Walmart and Amazon among their clients. They were reportedly exploring a SPAC deal back in December, valuing the company between $2.5 and $3 billion. So I think this deal gets done because, this rumor was set back then, and now Bloomberg is saying that it appears that talks are close. They have over 4 million customers, so online money transfers and digital payment services, which include getting money onto credit cards, debit cards, electronic wallets, or via bank transfer. They entered the enterprise credit card clearing business recently as well. Disclosure, I am now long shares of FTOC. I love Payoneer. I think it's one of those companies that everyone's been waiting for to go public via IPO or SPAC. And I think if this deal gets done, you're going to see, shares go up once again. That huge bar there yesterday on that rumor news. So keep an eye on this one. And then also off of the Payoneer rumor and news, we had BTAQ, Burgundy Acquisition, another SPAC that I own. Actually talked about this one, when it was trading close to $10 on the show. So shares saw strong volume and started moving late yesterday, kind of piggybacking off of that Payoneer rumor. Of course, Burgundy is linked to rumors of REE Automotive, but they also could be moving in sympathy to the Payoneer news because they mentioned in their prospectus that they could target an Israeli company. There's over 20 companies in Israel that are, thinking about going public this year, some large names. So keep an eye on BTAQ as well. And then a couple vote dates set yesterday to add to the calendar. We have AMCI setting their merger vote date for February 2nd with Advent Technologies, and PANA setting their merger vote date of February 9th with Nuvation Bio. So 2 more dates to add to the calendar. We do not currently have any more votes set until January 29th with NOVS voting on that merger with App Harvest. So that's headlines today, Mitch.
What's going on, Chrissy Chris? It looks like there's definitely some movement out here, So definitely, guys, if you're getting value from these notable headlines, definitely smash the like button down below. Hit the subscribe bell. Let everyone know where you guys can get this SPAC information. Sometimes we have people that just join us for these notable headlines, and I really can't blame them because the man with the brain here, bringing the information, and that's really what it's all about, guys, is getting those informed trades so that you guys can go ahead and make your investment decisions. All right, so Chris, I want to announce something. Took a new position, so definitely, guys, smash the like down below.
Let's hear it, everyone.
All right, guys. So FSR, you guys heard me talking about this one, and I was gonna let you guys know exactly if I could get in this one, and today I took it. So let's go ahead and pull up the chart here. Want to go ahead and full disclosure, I'm in this long, guys, today. My average is at 1484 today, guys. Was able to average in on the red to green move today. One of the things that I noticed, guys, and you can use your Benzinga Pro for this, is that I was alerted by this block trade here, guys. Wednesday, January 20th. Here, let me zoom in a little bit so you can see this, guys. One of the things is I want you guys to be able to see this block trade. This block trade was put in here on FSR, 1.7 million at 1477. That's really what got me a little bit excited. And then I was watching for it to do kind of a red to green move today. Was able to average in near 1480s. One of the things I can tell you guys is that where am I going to hold risk to? Because that's what it's all about, guys. It's having the man with the plan. So I'll show you guys exactly the plan here. So I got in here around this 1480 entry. One of the things that I want to do is I want to hold down towards the support. So let's go ahead and pull up the 6-month chart here. So I want to pull ahead and pull up that 6-month chart here so that I can get you guys exactly where we're going to risk off of. Okay. So one of the things is that, we want to go ahead and find where we can go ahead and hold this risk. So right here, right underneath it, we have these $14 price point that I can go ahead and risk off of, which was the prior support on this November 20th. So that's going to be kind of my risk, guys. I'm going to risk down towards that 14. It's about an 80-cent risk. Looking for a move back up above 18s. That would be kind of like that first potential target, then up there to 20s and 22. So let's see what happens, guys. Like always, guys, make your own investment decision. But what I want to do, guys, is just fully disclose on how I attack these and how I approach these. The story to me is that in the long run, EV is going to have another great 2021 year, and I'll be looking to see if I got this one timed in on the technicals. All right, Chris. So let's go ahead and let's get into the best part of the day, the interview that you guys have been waiting. So if you guys want to see the interview, go ahead and press 1 in the chat. I want to see that ones flying through there. Chris, let's go ahead and bring on our guest.
All right, guys. Yeah, so super excited. Another great CEO interview on the program today. So we have Orlando Zayas, the CEO of Catapult, joining us. So Catapult, omnichannel payment platform, going public with the SPAC FinServ Acquisition Corp, symbol FSRV. So Orlando, thanks for joining us on the show today.
Thanks, Chris. I'm real excited to be here with you today.
All right, so let's dive into some questions here. So up first, the question, we ask a lot of companies choosing to go public with SPAC. So the big question is, why choose a SPAC over a traditional PO to bring Catapult public?
Yeah, so, we were evaluating this decision last summer. We got an unsolicited offer from a competitor, and the board and I decided, maybe we should look at what our options are for the business. And I always felt that probably in a couple of years we would go public. Obviously the SPAC brings that home really quickly, and it's pretty exciting. I think that the timing was right. So when we hired the investment banker, we looked at a bunch of options, and we really liked the story that FinServ brought to us, and obviously the valuation, and excited to do this and do it in a quick manner. I think it's going to give us exposure to the retailers that we are working with now and future retailers, as well as to consumers about what we have to offer.
All right. So one of the things that I learned reading about this deal was that FinServ Acquisition actually said they evaluated 800 companies and did a deep dive on 100 different companies. So, what is it that you think really led them to pursue this deal with your company, Catapult?
Well, I think they looked at the market and the opportunity that we brought because nobody was really focusing on the non-prime consumer and e-commerce. They liked the management team. They really thought we brought the level of experience that needed to take a company public. My background was DRB Capital. I ran another business similar to this before this. My CFO was an auditor for a big accounting firm. She worked for large corporations. My COO, same thing. So we have a strong team that understands how to run a business, how to grow a business, and we've been growing this business since 2017 when we joined. So they like the growth story. They really like the management team, and I think foremost, one of the few SPACs or new SPACs that are profitable. We've been profitable since the beginning of 2020.
Awesome. So I want to talk about your impressive partner list. So Shopify, Wayfair, Affirm. I see over 150 different merchants listed. Can you talk about some of these key partners and maybe some that have been added to Catapult recently?
Sure. So our partnership with Wayfair is phenomenal. They obviously are e-commerce leader in home goods and furniture, and we've been a partner with them since in the late 2018, and have continued to grow with them and bring an incremental customer. The other one that we've had since 2017 is Lenovo. They've been an awesome partner with us. I think they went through a transformation with us, realizing that this e-commerce, the non-prime consumer on e-commerce was actually shopping on their website. We were able to capture incremental sales. And then last year, we signed an agreement with Affirm as a partnership with Affirm, where we will go together to retailers in what we call waterfalls. So, for example, in certain retailers like Purple Mattress, for example, if a customer applies for a purple mattress and it gets turned down from a firm, they will send their data to us automatically. Within a few seconds, we return back an approval, and a page is displayed quickly that says, sorry you were declined by a firm, but you have this offer from Catapult. And I think that's important for retailers because they realize that the consumer shopping online, if they're looking for financing, you've got to give them the best offer for their credit situation at that time. If you don't, they disappear and maybe they go somewhere else. So we're able to bring an incremental customer to these retailers. They see this as a really good value add. And then a firm, literally we go arm in arm to some of these retailers that they have. We focus on durable goods, and they like the fact that we can help bring that incremental customer to their retailers as well.
Awesome. That was going to be one of my questions, was talking about a firm, because I was wondering if they were, a partner or a competitor here. One thing with a firm I do know is they get a large portion of revenue from Peloton. So would that be the same Catapult offered through the Peloton if they are declined for a firm?
Yeah, we are not on Peloton yet. I'm hoping we will eventually. I think their price point is pretty high for where we focus. We focus, usually the price point is $600 to $1,500 or up to $2,000 or so. So it's a pretty high price point, but I'm hoping that we can get in there and come up with some alternatives for this non-prime consumer.
Awesome. So can you talk a little bit about, why is flexible leasing so important to consumers?
Well, it gives them a lot of choice. So, for example, when a consumer leases with us, at any time during the lease, they can return the item to us and basically discharge the debt. And so, imagine if you had an installment loan, for example, and you decided, you wanted to return it, you'd still be stuck with that debt. And so that gives them the flexibility of, I'm using something for 6 months. Maybe I want a better TV, or I want a different couch. I don't like the color. I want to return it. We give the consumer that option. But we also give them the option and the flexibility to get to ownership quickly. And so within 90 days of their lease, if they decide they want to buy out their lease, we only charge them 5%. So they can, if the couch costs $600, for example, we'll charge them, 5%, $30 for 90 days use. So it really is a great deal for the consumer to, give them the flexibility to pay it off as soon as they want to, or continue to make those payments and maybe return the item eventually.
Awesome. So the point of sale e-commerce non-prime market is listed between 40 billion to 50 billion, and Catapult has less than 1% market share. How do you think Catapult can grow market share, and what's kind of your target range for the next 5 years?
Yeah, no, I want to get. I think 5 to 10% market share is very reachable. I think what we've built from an e-commerce perspective, between our underwriting, our integrations with Shopify and other platforms, we're able to get into merchants quickly and easily. But the best process is that process that happens with the consumer. It really is quick and easy. They can get an approval in less than 5 seconds and get their lease completed within 90 seconds online. So it's really quick and easy. And it's all done because of our technology and our integrations with some of the, shopping platforms like Shopify, WooCommerce, Magento, et cetera. It makes it a really simple and easy process to get market share. But, just gotta get out to those retailers and let them know we have this offer and bring this incremental customer to them. And I think it's going to be an easy build.
Awesome. So revenue has grown over 100% for Catapult in recent years. Current projections are, 75% compound annual growth rates going forward. How do you see the company, continuing those strong revenue growth numbers? Will it be through new partnerships and platforms, or, growing that market share as you discussed, the e-commerce market growing, or just a combination of everything?
Well, it's a combination of everything, but we've got a pretty specific plan over the next year to 2 years, 3 years of how we're going to grow, and it really is the small to medium-sized businesses that are offering durable goods that are on these platforms that we can get integrated and be in their shopping cart literally within 30 minutes. And then there's the, a firm partnership, where we've identified, a number of merchants, over 900 merchants, where, we think the waterfall works really well. And then there's, the large retailers. I think COVID taught a lot of big retailers a lesson that, brick and mortar can suddenly shut down, and you better be strong on e-commerce. So we can help them bring that customer to e-commerce.
Awesome. And so I read that Catapult mentioned M&A, dividends, and buybacks for the future. So I'm wondering what's going to go in the thought process on issuing a dividend in the future.
But we're generating a lot of cash right now, which is something I think that makes us again unique in the SPAC world right now. And so as we grow the business, we're going to look at how do we allocate that cash? Do we return it to shareholders? Do we go out and buy something? And I think there's a number of ways we can do it. I think it's just going to depend on how much cash we build up and how fast our growth is. But we've learned how to make this business work and how to do it profitable. And so I think the sky's the limit as far as what we can do with that cash. I like the idea of maybe some interesting M&A, especially from a technology perspective, whether it's a shopping platform or something interesting like that. Biometrics, fraud is a big deal on e-commerce. How do we ensure that the person we're chatting with or we're communicating with, is who they say they are? So there's a lot of opportunities to grow this business. Obviously, the market is wide open, but from an M&A perspective, I think there's a ton of opportunities out there as well.
All right, just want to jump in here. So definitely want to tell everyone to go ahead and smash that like button down below. One of the things that I wanted to focus on was kind of the competition and the proprietary technology. So I'm going to go ahead and put this on. This is the investor deck here, and
Sure.
you could explain a little bit more about this, Orlando. So explain me the why we would win, and the proprietary technology that you guys have.
Sure, thanks, Mitch. It's this business is born and bred in e-commerce, and when we joined in 2017, I liked what was built around the machine learning and AI, about how we underwrite consumers, and really about the integration and and how you interact with consumers. And it's got to be fast, it's got to be easy, and so we've done that. If somebody applies with Catapult, it's very similar to the Affirm applications, with only a few fields. If you look at other non-prime providers, they usually ask for a lot of information because they're trying to evaluate the risk. Our models have been developed to understand the e-commerce consumer. We have to get a small amount of information and make a decision very fast. And we've built those models, and they continue to get better and better and better. And so that's the big piece of it. And that's really where the tech platform integrates between the between the underwriting, the integration with the merchant, because every merchant's different. We have some that are on platforms. We have some like Lenovo, for example, has their own proprietary shopping platform. So you've got to have a tech team that understands how to get the integration done. And then we're always evaluating how we interact with the consumer. And I think the beauty about this business is, there's not a salesperson in the store selling it, it's us. And we get to communicate directly with that consumer, real-time basis when they're shopping, and explain exactly what the product is, explain their alternatives. And all that happens in the back. The technology makes it all work, and it has to be done fast, or else you lose that customer.
All right, so I'm gonna hop back in here. So mergers and acquisitions. So said that was one of the possibilities down the road. What is it that you would look for as far as a merger? Would it be to kind of extend into parallel businesses, or kind of some competitors, or just what's the thought process there?
Yeah, it would probably be parallel businesses. I mean, I think what we've uncovered and what we do is really e-commerce, the power of the non-prime consumer, giving them the same choices that prime customers have, and that's something that they've been overlooked in the past. And so, are there other products, other technologies that we can buy that really fit into that theme? I want to stay in the non-prime space. I love your cat. I want to stay in the non-prime space. I want to make sure that it's easy, simple, and that we open access to these consumers to other products that they're struggling to get and struggling to finance. So that's what interests me, as well as the technology side. Are there faster, better, easier ways to do what we're doing and accomplish the same mission, focusing on this consumer and e-commerce?
Yeah, it looks like the cat agreed too with that one, Orlando. So I'll let Chris continue on here.
All right. So e-commerce obviously has been a big story during the pandemic that we have going on. So, I guess one of the big questions industry-wide is, can e-commerce growth keep going, or will we see a dip after the pandemic? So what's kind of your, thoughts on e-commerce growth going forward post-pandemic?
Yeah, no, we saw so many behavior changes, starting, my date is March 16th. That's when, New York went on lockdown and we sent everybody home, working from home. And it's been an amazing change. And I think where people before were not used to shopping online just because it was easy to go to their store, suddenly they had to. So I think it changed behaviors. And so I don't think when the stores open up that it's going to change anything. They now see the options, the choice. You can shop the price. You can do a lot of things online that you can't do at the store, and you're making that decision. You don't have a salesperson there, trying to hammer you into more stuff. So I think it's changed for good, and it's just a matter of how do we continue to make it easy for these consumers, especially on the non-prime side. As the states started opening up, we didn't really see much of a change in our volume. It really stayed at that level. So I think that's going to continue now that hopefully we're seeing the better side of the COVID time.
All right. So I want to get to some viewer questions we have here. I know you can't give us an exact date because that has not been released yet. But what quarter are we looking at currently for the SPAC merger to close, if you have an answer for us?
Can I say not soon enough? Is it?
Hey, you can say that. Absolutely.
Well, I just did. I guess I can't take it back. We're actually in the process of filing with the SEC, the S4. Hopefully that'll be done shortly. We're targeting early second quarter at this point. Who knows? We hear that there's a lot of deals going on and the SEC's backed up. I think that's going to be part of it. But with the stock price where it's at, the investors that we've talked to, I've been on the road show for the last 2 months. And we've got some pretty good excitement going on with some big investors. And so we want to get this done as quick as possible.
Perfect. I see another question kind of framed about the stimulus. So I'll try to ask it here. The stimuluses that we got this year, did you see spikes, in revenue and deals through that? And what could a future stimulus mean for a company like Catapult?
Yeah, no, it was interesting when the lockdowns first started happening. Of course, we were nervous. We tightened up. I think all the lenders tightened up. But what we saw with the stimulus is amazing purchase behaviors. Actually, usually our biggest day of the year is Black Friday. Our second biggest day of the year is Cyber Monday. Our second biggest day of the year was April 15th, believe it or not. And that was the day the stimulus hit. And so people felt, I think, a little bit more comfortable making those larger purchases. We also saw people paying ahead of time, so making payments ahead of time, to the tune of some pretty big numbers. And then our delinquencies have been the lowest they've been in our history, is because luckily the stimulus helped those people that were unemployed make their payments, and we work with our customers. So overall, the stimulus, helped our business both from a volume perspective as well as from a payment perspective.
I want to add to that there. One of the things that I noticed also in this kind of pandemic era was I noticed kind of the trend that everyone kind of went to, if it's like kind of this normal monthly payment that we're used to paying, you saw everyone kind of paying those. It was kind of more of like the bigger purchases, like mortgages, that were kind of being more questioned here.
Yeah.
So that's definitely what I saw. I don't know if you kind of saw that trend, Orlando.
Yeah, I think like I said, we were prepared. We were prepared for a decline in their pay through, but we didn't see it. But I think the other issue was, while the stimulus was great, is that on lockdown you weren't spending money. You weren't going to football games, you weren't going to the theater, you weren't going out to dinner, and so you had more income to pay the monthly payments that you did. So I had the same thing. I've had the lowest American Express bill I've had in the last 6 months ever in the history of my American Express bills. So it's I think it changed behaviors. But I think the stimulus definitely helped, and people were making their payments, and we appreciate that.
Yeah, so definitely, I really want to thank you for coming on with us, Orlando. You definitely touched a lot of points in the business, not just only kind of the perspective that everyone's looking at, but I really enjoyed learning about kind of a platform that I didn't even know about until yesterday. I can be honest, one of the things I like to be transparent, and everyone kind of focuses on, let's say, like PayPal or Square, but you got to keep your eye out on these new emerging companies. So Chris, go ahead and give us our great farewell.
Yeah, so we want to thank Orlando for joining us on the show today. Again, Catapult going public with FinServ Acquisition, that's symbol FSRV. And you heard it here. He's looking forward to getting that merger deal, completed as soon as possible. We look forward to following, the progress of that company, and look forward to hearing from you again. So thanks again, Orlando.
Thanks, Chris. Thanks, Mitch. I appreciate it. Thanks for the time today. Looking forward to it.
Definitely. Thank you. We'll see you next time. All right, guys. You guys heard it here first. Like always, guys, on the Spacs Attack, baby. Let's go ahead and hit that bell down below. Hit the subscribe. If you guys want to go ahead and continue getting these great interviews, Chris and I work hard. We got some other ones in the work, and we're just going to keep going at it, guys. So if you guys want to stay with us, you definitely, hit that subscribe down below. Hit that like. Chris, anything you want to add here?
No, I love bringing these CEO interviews to our viewers. Some great questions, a great insight. I mean, we got to hear about e-commerce during the pandemic. We got to hear about how that stimulus affected, his company. And we got to hear here, that he's looking forward to filing with the SEC to get this deal done. So, you guys are hearing this information, on the show first. So love bringing these interviews to our viewers. So smash the like and hit subscribe. We do have some more coming next week.
Yeah, we got a really great one. I'm not even going to give it out just yet. I'm super excited. One of the things that we've noticed, guys, is that we're definitely starting to be noticed by the community in the SPAC industry. So if you got some friends that haven't seen us, don't leave them out. Let them know about the show, and we'll continue moving and bringing experts, executives, and also touching some education throughout. One of the things that Chris and I always mention is the patterns in these SPACs and how you have to be a parent to these. Like, we're going to have a great boot camp on that's going to be on tomorrow. If you guys want to join, definitely. I'm going to add the link to the description after the show, but check it out, guys. We're going to do some education, talk about some waves. Chris, are you excited for the boot camp?
I'm very excited. We get to touch on some good SPAC and IPO information, for people maybe beginning to get into that industry. So excited about that. Guys, I'm also dropping a link here in the chat. We did just start a Spac newsletter. So again, you guys get headlines on this show, but we're also launching a newsletter through Benzinga where you're going to get kind of, SPACs in 5 minutes, an update. So you're going to hear headlines, you're going to see some rumors, you're going to see those deal announcements, and also some SPACs to watch for the week. So a great place to start and open that email every morning. So go ahead and subscribe to that email. It's free. So thanks, everyone.
Yep, like always, guys, and we'll see you next time on the SPACs Attack. Definitely check out the swag below. And like always, guys, when the SPACs attack, let's do it.